Time now for some fun. It's the Top That Trade Day. Joining us this week, Fox Business News contributor Phil Flynn and Scott Bauer, the CEO of Prosper Trading Academy. Here we go, guys, with round number one. GDP, please. The stock market has been rallying on hopes that stimulus money will reignite the economy. Is that a reason to buy now, or is it far-fetched?
I think it's a reason to buy now. I mean, let's face it. I mean, look at the stock market. It has performed magnificently under the worst economic conditions in the world, and a lot of it is because of the stimulus we're seeing in the system. I learned a long time ago, and you could have learned it in 2008, you could have learned it in 1987, don't fight the Fed and don't fight stimulus. They have more money than you do, especially when they can print it. So my bet is that this rally, as high as it looks and how quick it's come, I still think it has a ways to go.
And I somewhat agree with Phil. It is very difficult to fight the Fed. It is very difficult to fight stimulus. However, I do think we have come too far too fast, because there's a lot of hope out there for how we are going to get the economy restarted, and what is that going to look like. I own people, and for myself, I'd prefer a little bit of a sell-off here and then get back in, but with the expectations of 9 months, 18 months from now, not 3 months, 6 months.
Round number two, bold gold. What's your target for the yellow metal?
After a very, very significant rally, just above 1,700, and I think that we actually see some sideways trade here for a while until the economy starts to figure things out, and whether people want to rush again back into the gold rush, or if they really start dipping their toes in other assets. So for now, I see us trading very sideways. In fact, I wouldn't be surprised to see gold dip back under 1,700. But then if we get any sort of sell-off there around the 1,650 level or so, I'd be a buyer.
I like the gold. I think it's going to get to $2,000 an ounce by the end of the year, and it should. I mean, based off what we've been seeing as far as stimulus goes, your best example you have is 2008, 2009. The first time we went from quantitative easing, gold went from like $660 an ounce up to $1,800 an ounce. So I see the same pattern. But Scott does have a point. With the stock market regaining its legs here, there might not be as big a rush into the gold as there was when there was panic. You also have a situation, too, where we've seen a big drop in physical gold demand.
On to round number three, Wall Street versus Washington. The president is eager to get corporate America going again for economic reasons. But what about Wall Street and LaSalle Street? How quickly should traders fill the pits to get the market moving from the trading floor? Should traders go long or short on this one?
There's a big question. I think what we have found out during this financial crisis, there's been a lot of trading off the floor. And, but it's not just Wall Street, it's other businesses. A lot of businesses operated fairly successfully from out of their offices. It could change the way a lot of companies do business and hire people. There might be more people working out of home. Having said that, I really want to see the floor get back. There's nothing like that, that capitalism, raw and dirty, right in the middle of the mix of things. It really gives you a really good idea. I hope they get back to work. I bet they can't wait, and I can't wait to see them back.
Phil and I both live and breathe this every single day, not on Wall Street, but on LaSalle Street in Chicago, in the trading pits in Chicago. And I agree. The traders themselves, and I know this goes for the traders in New York and other places as well on Wall Street, they want to get back. But they want to get back and get those juices flowing, like Phil said again. They need to do it, though, safely. So as much as they want to jump back into the mix of things, they also realize there is a safety risk at this point. That being said, Angie, I would bet almost every floor trader to a person, to a man and a woman, cannot wait for the day that they can swipe their badge and get back onto the floor trading.
It's time for the bonus round question. Oh yeah, name the food where prices are dropping 40%. Is it shrimp, filet mignon, or lobster?
Ooh, I got to go with lobster, because usually that's that it's been high, and if that's the case, I'm going to have to run out to the store and pick some up. I'm saying lobster.
I hate to do it, but I agree with Phil. And when you run out, please get me a nice 2-3 pound one, will you?
You got it. Terrific.
All right, we're going to have to give you the chair, because seafood prices in some cases are falling, but the correct answer is filet mignon.
You're kidding me.
It's true. So many steakhouses are closed at some tenderloin is at the lowest levels in 10 years. Thank you. Great job, guys. Business First AM continues right after the break. For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.